Hi, this is Daniel, and you're watching Unrivaled Investing. This is a no hype financial channel that is mission focused on finding you exceptional companies and unrivaled investments. Today, I'm excited to talk to you about Airbnb at last. They just filed their IPO registration statement. The ticker is going to be ABNB. And how many companies are both a verb and a noun? Super interesting. And hyper-growth company, 5x in 5 years. That's how fast their revenue's been growing. But how are they holding up in COVID? I hear a lot of travel companies are getting hammered and not in a good way. And what type of valuation are investors considering for it, despite the fact that we're in the middle of a pandemic? But before digging into all these questions, my thoughts about their business model and their upside potential, a quick plug. If you enjoy learning about potential multi-baggers, make sure you subscribe. If you're already a subscriber, I love the love. Hit that like button. And if you want to follow my personal journey to find stocks that can potentially go up hundreds or even thousands of percent over time, go to unrivaledinvesting.com, click on journey. And so what's the Airbnb story? It starts with Brian Chesky and Joe Gebbia. In 2007, they were just looking to make some money to cover their small apartment in San Francisco when an international design conference was coming in town, and they smelled opportunity, and every hotel was sold out. So what did they do? What was born? Air Bed and Breakfast was born, with the hope of renting airbeds in their apartments. Airbeds? Fortunately, they got their first three guests, and the business model fortunately also did evolve to a global platform with 4 million hosts across 220 countries and 100,000 cities. You've gone from a little air mattress to renting an entire castle in the United Kingdom, which apparently has a 4.84 star review. Pretty nice. So what's the business model? Airbnb is a platform that enables hosts to rent out their property from a room to a castle, and Airbnb gets a cut. In 2019, they had $38 billion in gross bookings. That means the guests overall spent $38 billion to rent properties, of which Airbnb got a $4.8 billion cut. So that's their revenue, $4.8 billion, or about 12% of the gross bookings. That's their take rate, about 12%. That's a couple of percent lower than some of the other major, travel platforms. So it reflects that it's a little more affordable. Now, how have they performed? They've had 5x in 5 years in terms of revenue, where you can see they've gone from $1 billion in revenue in 2015, to nearly $5 billion in 2019. How about gross bookings? They've gone from $8 billion in gross bookings to nearly $40 billion in 2019. That is incredible growth, $40 billion. But $40 billion, that's a lot. That's an awful lot. Have they tapped out the travel market, excluding, COVID and the impact there? Are they getting close to tapping it out? Like, what's the opportunity? Management thinks the opportunity is huge, enormous. Like, just look at this bachelor pad from the Bachelor TV show that is available on Airbnb. No, but seriously, management thinks the serviceable addressable market is $1.5 trillion in any given year. So if Airbnb is able to get just 30% of that, that would imply that they have at least 10x potential from their prior high in 2019. And that is a big positive check mark that I like to see, because any investment I'm looking at, I want to see multi-bagger potential, seeing that it can go up hundreds or even thousands of percent over time. Plus, you're going to get inflation benefits with this company, where if you have inflation 2-3-5% a year, that's a model where Airbnb is going to get that, because that's just a higher rate that rooms are going to charge, and that's a higher cut that Airbnb is going to get each year. But wait, how are they doing during COVID? Like, I hear travel's just getting destroyed. Is Airbnb going to be too risky? What's the valuation now? And they're surprisingly resilient. In March and April, they had negative gross bookings. Now, that is just terrible. And that means you have more refunds than bookings during March and April. But keep in mind, that was during the middle of COVID. Nobody knew what was going on, particularly in the United States. But now, in September, we're only down 23% year over year from a gross bookings perspective, which really isn't that bad. Even more amazingly, their daily rate for what they're charging is up 18%. What? How? Inconceivable. No, Vizini, their daily rate is up because during a pandemic, people want to rent the whole house. They don't want to share a room or room in a house with a lot of other rooms. And ideally, it's in a non-urban location, far away from any nearby hotels that would be able to offer a competitive rate. So less competition, bigger houses or homes that people are looking to rent, and so you're able to get 18% increase in the gross daily rate. That is incredible to me. And let's get some perspective on these numbers. Like, the major competitives are seeing dramatic declines far worse than Airbnb. Over a 50% revenue drop for bookings, over a 60% revenue drop for TripAdvisor. It is a bloodbath. So what makes Airbnb so special? Why are they taking market share in the middle of a pandemic where they're only declining by 32%? So Airbnb's value proposition addresses all the counterparties. So first, the guests get a local and unique experience. They don't feel like an outsider. They feel like they're part of a community. It's an authentic experience and it's safe. You can see the 4.8 stars at the castle. It means it's not haunted. You get a variety of experiences. You can have a family rent it, or you can have your corporate office say, "Hey, we all want to go rent this castle." There's ease of which of like, "Hey, the castle moat's filled with alligators. Where's the alligator repellent?" You message, the castle gatekeeper, and the gatekeeper is going to get back to you. There's the affordability, which is generally, if you're not renting a castle, it's a little cheaper. The hosts win because they're getting income, whether or not it's a side hustle to a mortgage payment. Several of these hosts, many of them, this is a critical platform for them to cover their mortgage. There's also protection so that they feel it's a safe experience where Airbnb provides insurance with $1 million coverage per occurrence, and it also helps build the community where these travelers are coming in. The hosts leave recommendations saying, "Hey, here are the local spots I would recommend you go to. Hey, this pub's really great for you to visit." And it warms your heart to think, "Hey, I'm building up my local community." This creates a sustainable platform, and in order for any business to grow long term, it needs to be sustainable. Sustainable means it's win-win, where the guests win, the hosts win, and Airbnb wins as well. Plus, there's more. They probably have an unrivaled value proposition. That's the key filter that I look at all potential investments, because if it's unrivaled, it means you have a right to win longer term, where 79% of their hosts come directly to their platform, i.e. they don't have to spend money to go advertise and say, "Hey, hosts, you have a nice property you want to rent." They already know. They're a brand. They're a verb where people are going to Airbnb it. And so they don't have to pay to acquire these hosts. That's lower sales and marketing expense. Plus, 77% of their traffic is direct and unpaid. So, i.e., they don't have to pay Google to get people's interest in renting out a room. In 2020, it was even higher at over 90%. This dynamic means it'll be extremely difficult for a competitor or a new player to come in and disrupt them. They have this huge market. They've got these strong advantages. They'll prevent the competition from eating their lunch. I really like it. This platform smells great. But what about their valuation? And as they've executed, their private market valuation has grown as well. Pre-COVID in 2019, they were looking at a valuation of $35 billion. And more recently, we've seen a range anywhere from $18 billion to $30 billion. That's sort of post-COVID. And, the reality is during the middle of the pandemic, you had a really tough financing period where people were scared to lend to them, and they had to, they felt concerned themselves. They had no idea how bad it would get. And so they borrowed $2 billion, a first lien loan at 7.5 plus LIBOR with a LIBOR floor of 1%, so really 8.5% first lien, and a second lien loan at 10% plus LIBOR and a LIBOR floor at 1%, so really 11%. 5-year paper, just think about mortgage debt is anywhere from 2 to 3%. They were borrowing money at the worst possible time, and it was super expensive paper. And the reality is the valuation has seen quite a swing, where you're seeing anywhere from 35 billion last year to a range of, let's say, 18 to 35 billion now. Now, what are my thoughts on this valuation? And for that, you do need to go to unrivaledinvesting.com, click on Journey, where I create exclusive content just for my Journey subscribers. And I'm going to do a post exclusively on my thoughts on Airbnb's potential valuation in the days ahead. And, part of my journey here is to try to find potential multi-baggers, where I'm looking for companies that I think can go up hundreds or even thousands of percent over time. It's companies that I want to think about when I wake up in the morning, and companies that make me excited to own. And that's what I'm looking for on my journey. So if that sounds like something you're interested in finding those types of potential multi-baggers, go to unrivaledinvesting.com, click on Journey. And if you enjoyed this video covering Airbnb, please subscribe, and thank you so much for watching.